Good morning. Welcome to Chaikin PowerFeed, your daily market digest. Today is Wednesday, September 19th, 2018. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can check me out on Twitter at DanRusso_CMT. PowerFeed TV brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. You can sign up to receive Chaikin PowerFeed for free if you head over to www.chaikinanalytics.com/PowerFeed TV. U.S. equities were higher in Tuesday's trading. Consumer discretionary and industrials were the best performer, while the defensive sectors and materials were the biggest laggards. Treasuries were weaker. Curve saw some steepening in the 10-year yield across the 3% line again, touching its highest level since May. Dollar was stronger against the major currencies. Gold finished down 20 basis points, and crude oil finished up almost 1.5%. Breadth on the New York Stock Exchange was positive 1.3 to 1. Breadth on the NASDAQ, positive 1.4 to 1. As we said, consumer discretionary, industrials, and energy outperformed, along with tech. Underperformers were really your defensives, REITs, consumer staples, and utilities. And as we get to the desk this morning, futures are pointing to a relatively flat open, despite the heightened trade tensions between the U.S. and China. Asian markets actually rallied overnight, with Japan, China, and Hong Kong all up over 1%. European markets are mostly higher. Treasuries are extending their weakness. 10-year yield is at 3.05%. Dollar lagging on the euro and the sterling, not doing much against the yen. Gold up 40 basis points, crude down 20 basis points. And when we roll all that up, we can see that not much has changed from the big picture perspective for the S&P 500. We're testing resistance in that 2,900 to 2,920 zone that we've been highlighting as quote-unquote soft resistance for now. Support does come into play at the breakout level, 2873, and then 2800 and 2746 is the rising 200-day moving average. We touched on resistance already. Really, from a momentum standpoint, though, the RSI is confirming the price trend, and that's what we're looking for. I'm not a big believer in blindly, selling a product when the RSI is over 70 and buying it when the RSI is under 30. I use RSI more as a confirmation of trend, and I look for divergences. And what we can see here is that basically since the bottom in March, the RSI has not become oversold, and it's gradually made a series of higher lows. So that tendency towards bullish momentum confirms the price action that we're seeing. Add another confirmation data point, as Chaikin money flow has been predominantly positive since May, and not much changes in our big picture view for the market in general. Up and to the right, as long as we're above 2873, we think the path of least resistance for the market is higher. Your market in a minute. PowerFeed subscribers every day will send you an email, and started off with the 5 key bullet points that I'm keeping an eye on, what I'm talking about in my note to Chaikin Analytics members. Stocks rally in the face of tariff news. Fine, we talked about that. 10-year yield closes over 3%. We'll take a look at that chart. Software stocks nearing oversold levels, and that's based on our proprietary overbought, oversold indicator within Chaikin Analytics. So we'll take a look at that today. Sentiment inches towards greed, and futures do point to a flat open. From a power bar perspective, we can see some strengthening in the Dow, 8-1 bulls to bears. S&P 500 saw some strengthening as well, 123 bullish or very bullish stocks for 57 bearish or very bearish stocks. NASDAQ back to 2-1 bulls to bears as it outperformed yesterday. Small caps still skewed in favor of the bulls, but we've beaten this dead horse on the deterioration in the relative trend of small caps against large caps, and you can see it here in the deterioration of the power bar ratio. And even in an up day in a risk-on type environment yesterday, S&P small caps underperformed the S&P 500. Bonds lower, yields higher, consumer discretionary had a good day. But notice, and this is something that I've been talking about for a while, power bar ratio for discretionary is actually skewed in favor of the bears. The relative performance and the strength in discretionary, in my opinion, is really being led by Amazon and a handful of retailers. According to the Chaikin Power Bar, large cap stocks and small cap stocks are bullish. Major indexes are mixed. Our stock of the day, as you know, every day, PowerFeed subscribers, we auto-generate a stock of the day for you based on our proprietary power gauge rating. And today's stock of the day is Moog Inc., the Class A shares. Comes to us from the Aerospace and Defense Group, which I touched on bullishly earlier this week. Closed at 83.84 yesterday, up over 1.5%. And the power gauge ratio for MOG.A is very bullish due to very positive expert activity, attractive financial metrics, and strong price volume activity. Stock does have some weak earnings performance, though, so it's something to be aware of. But when we roll up all of the factors that fall within these four categories, we come out with a very bullish rating. And as we analyze the chart here, we can see ribbon at the bottom of the screen tells us we're on that very bullish rating, but we can also see that the dynamic duo is not in gear. This stock has been underperforming the market since January, and although the intensity of that underperformance has been lessening since late July, early August, it is still, in fact, underperforming the market. We're closer to oversold than we are to overbought. Money flow is positive. We've regained the long-term trend line, which is changing from down to flat to now starting to curl higher. It's a very bullish stock with a strong trend and a strong industry. This is one of those where it really depends upon your risk profile and how aggressive you are, as far as I'm concerned. If I'm following my process, which I try to do religiously, this is not a name that I could consider being long for now, just because I like to own names when the dynamic duo is in gear. I like long ideas on stocks where the market and our model are in agreement. That means a bullish stock or a very bullish stock that's outperforming. We're not there yet. If you want to make the bet that this relative trend is likely to continue to improve and take a position here, I can understand that, but I would also highlight we are closer to our upper volatility band. I want to see this stock outperform. I want to see this metric get better before I really want to get involved on the long side, adding it to a bullish watch list. But remember, I am bulled up on aerospace and defense. And you can see aerospace and defense is an industry group within the industrial sector, which has been the top sector over the last 5 days, up nearly 2.4%. Energy having a good day as oil rallies. Healthcare is just emerging leadership. Its sector's been doing well. Services and equipment, really we're doing the heavy lifting early, and now some of the larger pharmaceutical stocks are coming on. Materials, a little counter trend move. Staples and utilities decline a little bit with their underperformance yesterday. We want to see tech come on board. That new comms group, relatively flat. Real estate and financials, bottom of the list. I can understand why real estate would be there if yields are going higher. Rising rates, positive for the banks, mixed for some other financials. We'll see how that all plays out. And here's our industry in focus. We touched on it earlier this week, but here it is again today. Aerospace and defense services, 10 very bullish or very bullish stocks for 3 bearish or very bearish stocks based on our Chaikin power bar. And over the last 6 months, aerospace and defense has outperformed the S&P 500 by 4.8%. Power bar ratio, which measures future potential, is very strong, with more bullish than bearish stocks. And it's currently ranked number 4 of the 21 subsectors that we look at. Indicative names there: Agility, EGL, Moog, we just looked at it, MOG.A, and Curtis Wright, ticker symbol CW. Curtis Wright looks great to me on the chart, but based on our indicator, it is overbought. So we're going to look at Agility Holdings. Ticker symbol EGL has a very bullish Chaikin power gauge rating. Strong trend, strong industry. We are barking up the right tree, fishing in the right pond. Use your tacky phrase, if you will, your cheesy phrase, rather. Ribbon at the bottom of the screen here tells us where we've been and where we are. Here's our very bullish rating. We've been outperforming the market since May and continue to do so. Market and model are in agreement. Dynamic duo is in gear, and the stock is oversold with bullish money flow above the rising long-term trend line. Past 3 earnings announcements have surprised to the upside. We've broken through resistance at the $34 level, and we're now testing that. Middle of the range for our volatility bands. Folks, this is the setup right here. EGL on the long side. Strong stock in a strong industry, in a strong sector, in a rising market. Stocks outperforming the market. It's become oversold with bullish money flow. This is the setup. I like EGL on the long side. Trending, let's look at yesterday's S&P 500 movers and shakers. UNM up 5.6%. Netflix up nearly 5%. UNP and NSC. UNP had an analyst day where they outlined their plans out through 2020, and the market seemed to like that. So that stock was higher, and it actually pulled NSC along with it. It was a derivative play that was up in sympathy. SYMC Symantec doing some work with an activist investor. Market seemed to like what they heard there. UNM was actually up on earnings. On the loser side of the board, General Mills down following their earnings announcement. FedEx down following their earnings announcement, both neutrally rated stocks. MMC, very bearish stock, down 4%. AbbVie getting looked into for some potential kickbacks to healthcare providers. That stock down 3%. BWA down over 2.5%. Your earnings update now, as we said, General Mills beat by 7 cents, but it wasn't enough. Stock got hit. AutoZone beats by 66 cents. Bullish rated stock. Not really seeing it do much here. CBRL, Cracker Barrel, misses by 47 cents. That is a bearish stock. Before the open today, we heard from Copart. This is a big growth and momentum name. It's neutrally rated within Chaikin Analytics. Stock is trading up a little over 1%, but all eyes are going to be on Red Hat tonight after the close, especially in light of the way that Oracle traded following their earnings announcement earlier this week. SCCO also reports after the close tonight. Chaikin does suggest caution when holding bearish stocks ahead of earnings. So now let's look at kind of some of the big picture themes we're looking at today. Here's your 10-year yield. We did break through 3%. We are above the 50-day moving average, which is curling higher. We're, resistance now should become support in theory. 200-day moving average moving higher. We've been talking about it for a while, that while we've been in this consolidation, we see the path of least resistance as higher for the 10-year yield. Going to be a lot of back and forth about what higher rates mean for equities. For us, we're not concerned until we get closer to 5%. Still going to have this high here around 3.1% to contend with, but path of least resistance does remain higher for yields. We think ultimately yields are going to trend higher. You can see here the RSI confirming the breakout, right? As the breakout through 3% was met with a higher RSI level. This is what I was talking about earlier. Has not become oversold since June, shifted to bullish ranges, and now the price high or the yield high confirmed by the momentum high. That is how I use RSI, and we can see there very clearly confirmation of the breakout. Now we'll see if 3% becomes support. As I said earlier, software and services were nearing oversold. Our proprietary overbought, oversold indicator is designed to become overbought or oversold, even in a flat market. It's a little more sensitive than the traditional RSI that I like to use sometimes. And, it should be no surprise, software and services has been a group that I've been extremely bulled up on for a while. It's the number 3 industry group of the 21 industry ETFs that we track within Chaikin Analytics based on the power bar ratio. But quite frankly, it got ahead of itself, right? It was hugging the upper volatility band. Some of the stocks succumbed to some profit taking. Now the fund itself is closer to oversold than it is to overbought. Notice we're continuing to outperform relative to the broader market. And look at the strength of Chaikin money flow here above a rising long-term trend line. I think now is a good opportunity to go hunting for software and services stocks that are still outperforming the market, but that have become oversold on a near-term basis. And one of those stocks that I like, I actually made it my stock of the day today in my morning note to Chaikin Analytics clients, is CyberArk Software. Ticker symbol CYBR. I'm using our stock charts chart here, and we can see steady uptrend, 50-day moving average higher, 200-day moving average moving higher. Do have a zone of support in the $68 to $70 level. RSI has not been oversold at any point in the past year. Actually, most recent leg lower has held above 50. Chaikin money flow is bullish. I like CyberArk as a trade to the long side here now. So if you like what you're hearing here, we definitely appreciate you helping us spread the word. Share our link on social media, www.chaikinanalytics.com/PowerFeed TV. If you're enjoying what you're seeing and you're enjoying getting these profitable, powerful stock ideas and more, sign up for the PowerFeed email every day so you can follow along with this call. Head over to chaikinanalytics.com youtube.com/PowerFeed TV. Have a great Wednesday, everybody. Special thanks to Stock Charts and Stock Charts TV for hosting.